So what next for Philippine assets following the confidence shock that led the Bangko Sentral to carry on cutting its key rate to 4.25%? With us now for more is Mike Enriquez, President and Chief Investment Officer of Sun Life Investment Management and Trust Corporation, Sun Life's investment management and trust arm in the Philippines. It's good seeing you again, Mike. Welcome back to the program.
Hi, good morning, Kathy.
So first up, how'd your funds do in 2025? If we could just baseline from that, because given all the volatility that you've navigated from Trump's first salvo of Trump's tariffs to the last quarter shock and off with the country's flood control scandal.
Yeah, admittedly, last year was a bit challenging, especially on the equity side. But we generally had a good run, especially across equities and fixed income, but more so on the fixed income side. Majority of our funds have outperformed their respective benchmarks. So I think a lot of our investors are quite happy. More so on the fixed income side, we all know that the equity market, especially in the local side, was a bit on the flattish and side, in spite of the fact that we've outperformed, but generally it didn't really perform up to investors' expectations last year. So we're hoping this year can change a lot of things. So
But
we've
can
been
it?
seeing a
I
lot of
mean, Mike,
development.
what do you make now of that confidence shock underscored by the BSP governor himself? When I spoke to him last week, last Friday, he did make a mention of confidence as really the gauge, if you will, or the lack thereof. He mentioned that monetary policy can only do so much with the cutting that he's done. Just listen to this.
We feel that we're at the point where monetary policy cannot do much more. Interest rates can't do the trick. It needs help from other things.
And Mike, those other things include everything else a national budget could do on the fiscal side, restarting big spending and public infra, encouraging private construction. How are you reading into the timings of that economic recovery? And how is that influencing then your investment strategy between stocks, bonds, and cash?
Well, clearly the governor's right, and I agree with his assessment. Monetary policy can do just so much. I think he's delivering the policy normalization that we have been expecting to help boost the economy. However, the government has really to do its part in terms of the fiscal spending. Clearly, our GDP lacked last year, given the more tame spending from government. And we all know that this is a consumption driven economy, but as you well pointed out, investor confidence and the consumer's confidence to spend is really something that would matter a lot on how this economy will continue to recover this year. So, well, we've been seeing a lot of good indicators that number one, the government has really been very focused on addressing some of the fiscal gaps that happened last year, and they've been addressing a lot of these so-called scandals that has rigged the market over the last few months of the year. So this year, hopefully, we can see more government spending and really spending on the right projects that would provide that multiplier effect on the economy that we are
Right.
looking at, infrastructure
And
and
it's really what everyone is looking for, the that catch up coming to be. But then you've got global risks again reigniting fears with the illegality that the Supreme Court mandated over Trump's tariffs, really upping the ante right now. I've just spoken with George Manzano saying 15% is an across the board tariff imposition across all trading partners. How is that then figuring into your level of risks? Is the global risk bigger than local? What are you now
well,
seeing, and how is that going to change your asset allocation?
well, I think Kathy, based on the first time that Trump announced the tariffs for the global partners, the Philippines really didn't was not affected that much because we all know that we're not really an export oriented country. I think what we really consider more on the sentiment side is how global markets react to this, because anything that will happen to global markets, all the local equity market continues to react, in spite of the fact that we are still just on recovery phase, right? So we haven't really moved the needle. And then again, when we see a lot of volatility happening from other markets, then our local equity markets continue to be affected as well. I think what externally, what we're really watching out closely is really this US Iran deal that is happening. It might escalate into something worse. So hopefully not. So that is something that will trigger. That's why you've been seeing oil prices starting to go up again. So that would have a more direct effect on the Philippines in terms of oil inflation. That would trigger again some uncertainty on the economy's recovery.
Okay,
Other
as a
than that,
final point, Mike, then, how are you going to strategize? How differently or similarly are you going to position in your fund strategy this year? Is it still going to be more fixed income or more little of stocks? Because now we're seeing those foreign fund flows come in.
I admittedly there are our local equity market has absorbed a lot of the negative news. I think there is time right now to take on local equities. But for us, fixed income continues to be our primary focus, because we see long-term rates will start to adjust lower. But I think local equity market is worth a second look at right now, given that a lot has already been priced in and there's more prospects for it to grow.
Okay, depends on your risk appetites then. I guess that's the message. Thank you so much for joining us, Mike Enriquez of Sun Life Investment Management and Trust Corporation.